Hey, good evening. My name is Nova, and tonight I'm going to talk to you about blockchain and accounting and how I think blockchain will revolutionize accounting, more importantly, auditing. So, a little background information on me. Prior to starting Queens in August, I worked for a tax and accounting firm as a staff accountant for 5 years. And, while reading Blockchain Revolution, the part where they talked about the accounting aspect really sparked my interest, and I was like, that's it. This is exactly what I'm going to talk about and research. So with that being said, the agenda for tonight is introduction and food for thought, history of modern accounting and problems, solution, enter blockchain technology, a new idea, triple entry accounting, and will the use of blockchain end the need for auditing? That was a big question that came up during my research, especially with some accountants and even myself. Conclusion and Q&A. So, introduction and food for thought question. Accounting has become known as the language of business. Accounting is the measurement, processing, and communication of financial information about economic entities. So, food for thought. Will traditional accounting practices survive the velocity and complexity of modern finance? I hope I can answer this question for you throughout this presentation. I want you to just kind of think about that in the back of your minds as I present some of this information for you. So, history of modern accounting. During the Renaissance, an Italian named Luca Piccoli, he invented the double entry accounting method, meaning every financial transaction has equal and opposite effects in at least two different accounts. It is used to satisfy the equation assets equals liabilities plus equity, in which each entry is recorded to maintain the relationship. So, some problems with modern accounting. Human error is one of the leading causes of accounting mistakes, entering the wrong information. For example, say I receive $1,000 of service revenue, and my fingers are just super happy, and I'm just carrying along, and I enter $10,000 instead of $1,000. Well, that's going to affect the accounts receivable side of that equation. So that's going to overstate my balance sheet under the current assets by $9,000 in the accounts receivable account. And also it overstates my income statement under the revenue account, service revenue, by $9,000. So that's definitely incorrect, and it overstates that account or that company's information. Current rules rely upon management to swear that their books are in order. However, managers do not always act with integrity. For example, that would be Enron and WorldCom. And number 3, new rules like the Sarbanes-Oxley Act of 2002. So with the growing complexity of companies, more complicated transactions, and the speed of modern commerce will create a way to hide transgressions. And number 4, traditional accounting methods cannot reconcile new business models. So, for example, microtransactions. Most accounting software only allows for 2 decimal places, which would be impossible to record microtransactions, which would need at least 4 to 5 decimal places in order to record that transaction. It's not that that accounting, the actual idea of measuring and processing and communication of financial information is the problem. It's just the application of accounting methods must catch up with the modern era. So, solution, enter blockchain technology. The worldwide ledger, a transparent record of everything, means that a regulator would have access to the same base layer of data. That would mean less work, less cost, and we could be held to account in near real time. With the shared public ledger, auditors and bank examiners could have automated forms of examination to look at the underlying health of the balance sheet and the strength of the corporation. Companies would benefit from greater transparency, not necessarily in terms of streamlining their finance department or lowering cost of an audit, but in how the market values their company. Increasing transparency is a huge opportunity for managers everywhere. It allows the highest standards of corporate government, seizes the mantle of trust as corporate leaders, and it all does this by embracing the blockchain. So with that, a distributed ledger would make audit and financial reporting real-time, responsive, and transparent. It will dramatically improve capacity of regulators to analyze financial action within a corporation. What do accountants need to know about the blockchain? Blockchain secures information and reduces alterations. The basis of this technology is the encryption that secures transactions and records. Every transaction conducted using the blockchain is encrypted. The involved participants are identified by a string of characters, and after a certain period of time has passed, all of these transactions become part of the block. Blockchain will reduce errors. If the participants in a certain transaction are identified, the time and date of these transactions is verified and associated data is secured, and the possibility of errors will decrease dramatically. And accounting will become real-time. Blockchain technology will enable accountants to monitor financial performance in real time. With blockchain being decentralized, it would be simpler than ever to track and monitor the inflows and outflows of a business. So blockchain has the potential and is already changing how the accounting profession operates and will navigate the business landscape moving forward. Okay, so a new idea that was brought up during my research was triple entry accounting, which is a concept conceived by Yuji Airi. The concept presents a new idea to do accounting by replacing the standard accounting equation with a more complex formula. Yes, as if accounting isn't already complicated enough, right? Yuji added on new concepts to provide more information about where the organization is headed. The idea is that accounting could be fundamentally tied to forecasting and therefore enable better strategic decision making. Essentially, the idea behind triple entry accounting could vastly increase transparency and responsiveness through real-time accruals, verifiable transaction records, and instant audits. Then blockchain could solve many of the accounting biggest problems. As I mentioned earlier, I gave you 4, but there's a whole lot more to that, definitely. So a question that was brought up during my research, will the use of blockchain end the need for auditing? Some may believe it will, and in fact, I went and spoke with my old boss at the accounting firm I used to work at, and I just asked him, hey, what do you know about blockchain, and do you think would be great for accounting in the near future? He was totally weary about it. He just thought it was a terrible idea, but he's one that thinks the gold standards should be brought back into existence. So we'll just let that slide there. But I personally hold a strong belief that it will only add greater value to an organization, especially for the Big Four. So what I mean by the Big Four is the Big Four auditing or accounting firms. Most of their services and revenue is from auditing and assurance services. So like Deloitte, PricewaterhouseCoopers, KPMG. So auditing is a backward-looking process which results in a lot of time and money spent to review a company's financial information. Blockchain will change the auditing profession and the skills that will be required, but it will not end the need for auditing. Audit firms will still need someone to assess in real-time value of intangibles like copyrights, trademarks, and goodwill, things that are not physically, you're not able to physically value, like this coffee cup or this pen, things that you cannot physically touch. Blockchain transparency gives visibility to all transactions for approved users, and this may decrease auditors' work within sampling and validating transaction. But this allows auditors to focus on controls and investigating abnormalities. So what I just said and what I mean by controls is in auditing, they use 5 common principles of internal controls. And those include establish responsibility, segregate duties, restrict access, document procedures, independently verify. So I'm going to give you a quick example of what an internal control procedure looks like. So Sally receives checks for deposits. Basically, she just opens the checks up, places them in a bin for deposit only. John comes by, picks up those checks, records those checks in the accounting software, and then gives those checks to Brenda. Brenda then will take those checks to the bank and deposit them. The bank then will verify those deposits on the bank statement. That then will be issued to the company whenever it is time to issue the statement. So within those internal control example that I just explained to you, we established responsibility. So Sally, John, and Brenda all have a responsibility. They segregated their own duties, restricted access, documented procedures, and independently verified, which the bank independently verifies those deposits. And, you know, those are very important concepts in auditing, and to be able to, you know, see what's going on within the organization. That's the first thing most audit firms do, is evaluate the internal control procedures and to make sure everyone working for that organization has their own duties, and it's segregated amongst employees and within the company. And then, you know, they will then, you know, audit accounts receivable, revenues, whatever. And conclusions. So earlier tonight, I asked you, will traditional accounting practices survive the velocity and complexity of modern finance? Accounting methods must continue to evolve, and accountants need to embrace this new disruptive technology to stay ahead of the game and educate themselves on blockchain technology. Accountants should understand the benefits of using blockchain technology and how it impacts audit firms and stakeholders. So, in summary, essentially, blockchain increases transparency, reduces the lack of integrity among managers, lowers costs and time spent on auditing financial statements, leaving more time to focus on internal control and other problems associated with accounting. Currently, Deloitte is using blockchain for their ERP systems, and I can only assume that within the next 5 to 10 years, it will slowly transition to blockchain would be used for their accounting procedures. And I will quote this from a guy named Craig LaBrue. He's a CPA, and he says, and I quote, "There has probably never been a better time to be an accountant." So with that, I'm going to open up the room with questions, and I'll be happy to answer those for you.